This is Swathi from the Department of Management Studies. Now in the E-class we are going to discuss on the finance function. Finance function is a part of financial management. Financial management is a managerial activity which is concerned with control and planning of financial firms' financial resources. It is the source to run any organization, it is the providing of money, it is the acquisition of funds, it is the provision of money. There are different sources of raising the finance. Basing on the time being, it is divided into three types. Okay, it is a long term, medium term and short term. Long term means more than 3 years. So first one is the owner's capital. This is the amount invested by the owners of every organization. And next comes the share capital. It is divided into equity share capital and preference share capital. The difference between these two is preference shareholders are given priority in payment of dividend, as well as equity shareholders are the owners of the organization. And next one is the retained profits. Okay, it is the known as the profits set aside for the future benefit. And next comes the debentures. Debentures are the creditors of every organization. There are 7 types of debentures. So one is the convertible debentures, partly convertible debentures and fully convertible debentures, secured and unsecured. At the same time, last one is redeemable and non-redeemable debentures. And the last one, the loans raised from the various financial institutions. Medium term finance, it is less than 3 years and a period of more than 1 year. So this is the part of raising loans from banks and financial institution. And last comes the short term finance. It is a period less than 1 year. Here we are having the options of bank overdraft, commercial purpose, at the same time trade credit. You will be having another types, various advances from the customers. These are the various types of short term finance. And next comes the nature of the financial management. It is an indispensable organ of an organization. That means it is very important for the smooth running of every organization. It is different from the financial accounting. At the same time, the management is also different from the financial accounting regarding transactions. It is a centralized nature of finance function, and it is applicable to each and every organization. Evolution of financial management. Usually when we are going to study on the evolution of financial management, is divided into 3 phases. One is traditional phase and transition phase and the modern phase. In the traditional phase, it is regarding the decades, for last 4 decades, that is from 1940. In that area we are given importance for the outsiders. That means we always bothered about the how to raise capital, lenders and all those things. Later on we have in the transitional phase, that is from period of 1940 to 1950, we have given importance, that is working capital problems are recognized by the management, as well as we have given importance for the capital budgeting techniques. And in the modern phase, due to globalization and whatever the things that are changing in the world economy, we are giving importance for the wealth maximization, function of financial management, as well as the portfolio analysis. And the next comes the scope of the financial management, and that means how far this has been extended in the subject. Okay, so it is the planning of funds. We have to properly plan for each, because these resources are very scarce. We have to make for a proper planning for the proper allocation of these resources. And next comes the raising of funds. What are the various methods and techniques that are available in the market for raising various type of funds whenever there is a requirement. And next comes the allocation of these resources, because whenever we are going to planning for the expansion and all those things, we have to allocate the resources, so that basing on the proper raising of funds in a methods in a different method, and how far you can raise these funds, and the get backing of the ratios, how far you are going to get back your money in a short span of time. At the same time, control of the funds. This is the cost control and cost reduction techniques which are used in the production of various goods and services. And next comes the allocation of income. Various departments, usually every organization will be divided for more and more organization. We have to plan and allocate these funds in a proper manner. And next one is the coordination with the non-financial department. When you are working in a financial department, not only bothered with this, we have to take consideration of all the segments from the non-financial departments also. Forecasting of the cash flows. This is the most important part of the finance function. Always when you are going to planning, you have to go for proper planning of the cash inflows and cash outflows. Okay, and next comes the cost control, and follow the various pricing techniques for planning which are produced by the organization. And the last one is the measuring of cost of capital and financial risk evaluation. Finance functions. First one is the investmentations. Investmentation is also called as the capital budgeting techniques also. How far, whenever you are going to plan for growth maximization, how the capital must be allocated in various segments, that is about the investmentation. And next comes the financial decision. It is also called as capital structure decisions. It is the study of debt and equity ratios. And next comes the dividend decisions. Dividend decision is the how to declare the dividend on various types of ratio on various shareholders. This is mainly studied on the profitability of the organization. And next, the most important one is the liquidity decisions. Liquidity is very important for the smooth running of organization. The success of every organization mainly depends upon the availability of working capital, and this is decided only by the liquidity decisions. So, and next comes the profitability. How far you are going to acquire more and more profits by a smooth running of the organization. And next comes the objectives of the financial management. Basic objectives. First of all, it is the maintenance of liquid assets. Liquid assets are cash in hand, cash at bank. Okay, these are very important for the working capital requirements of each and every organization. And the liquid assets is decided only by the smooth running of organization, and the working capital will be decided mainly on the liquid assets. And next comes the profit maximization. Due to heavy competition in the economy, we always want to make more and more profits. What are the various sources available to raise more and more profits? That is about the profit maximization. And wealth maximization. There is a lot of difference between the profit maximization and wealth maximization. Merely not bothering about the profits, how to create more and more assets which are very useful for the growth of the organization. And other objectives is, because the shareholders are the main persons who are coming forward invest in the organization, you must always give better return to the shareholders. And next comes the building up reserves for growth and expansion. Always planning for the expansion of the organization. In which areas we can accept, all these things have to be taken into considerations. Now comes the part of the functions of a financial manager. So, thank you very much.